what is the trigger, let's say, when you have a good month in your business and you find a way to spend all of that? Why do you do that? By the way, guys, we all have things to work on, stuff that's conscious, non-conscious, and meditating for 7 years has really helped me own that in. So quite simply, if you want to have a wealthy life, you need to be in control of your emotion and your thoughts. Meditation is key. The fifth habit is stacking high value skills. Now, notice there's a difference between high value and high income skills. A high income skill is things that I talk about, copywriting, sales, learning content creation, things that I talked about before, programming. These are all high paying skills. These are things that you can get compensated for as a service provider. These are all high paying skills. These are things that you can get compensated for as a service provider or as an entrepreneur, even in your career. Okay. Very generously for. What's the thing is about this, entrepreneur, even in your career. Okay. Very generously for. What's the thing is about this is they're quite easy to quantify. They're quite visceral, right? When I say high value skills, I'm talking about something that's so important, but you don't. Yeah, so good evening, everyone. Check. It's still recording, right? Okay. So good evening, everyone. You're welcome. If you can hear me loud and clear, please type on the chat. Let me be sure that you can hear me so we can get started. So good evening, everyone. You're welcome. If you can hear me loud and clear, bring that slide, the one that is inside. That you can hear me so we can get started. Eh? No, this the footwear. Yes. Slide, the one that is. That you can hear me so we can get started. No, this. No, no, skip it. Okay, so good evening, everyone. Welcome once again to today's class. So, how are we doing? If you can hear me very well, let me know on the chat. Let me be sure that my voice is loud and clear. I want to get started immediately. How are we?
So yesterday we were able to do a full introduction on the forex market. Yesterday, I need someone outside for directions. So call your number. Okay. Six what? 64 64 03 07. Okay, so Mr. Emeka, call this number on the chat so he can direct you to this place if you're coming physically. So yesterday we have a lot to cover today, a whole lot. So yesterday we started with introduction. We started with introduction. We were able to establish what is forex, and we were able to cover from module 1 to module 5 of the handbook. So if you're just joining us today, we sent a handbook to the Telegram channel for everyone to download so that you can actually use it as a guide. So as we're teaching, it becomes much more easy to follow up if you have the handbook. Okay? So welcome. Yes, welcome. Are you Emeka? Okay, okay. Welcome. So for those online, if you're here to download the handbook, please, as much as possible, as fast as you can, download the handbook so that you don't, so that you're not lost at any point. So we're going straight to patterns analysis, and we'll discuss the principle of support and resistance. If you're using the handbook, is in module 5. Okay, module 5. Zoom in the screen. Okay. Good. So this is something that is very familiar. If you have ever come across the forex market before, you must have seen something like this. You must have seen this this weird looking things. Something like this. You know, when I started learning forex, this was one of the things that scared me the most. This was one of the scores. I looked at their charts, their trading charts. It was looking very confusing. I will look at the chart and I'm wondering, what is all this red and black, white and blue lines? What are they for? But over the years, after trading for a very long time, I find that it has become more like second nature to me. It has become much like, once I just look at a candlestick, a chart, I can literally just give you an interpretation of what it means. So, and that is what, with practice, it can happen to anybody. It's not just peculiar to me. Okay, this thing can become second nature to you. By the time you just look at a chart, you can interpret the next possible action. Okay, now, first of all, I told you yesterday that the price of a chart, that the price of every currency pair typically looks like this. Okay, for instance, let's do Euro USD. Okay, let's say at 2 a.m., the price of Euro USD was 1.2000. Okay, and at 5 a.m., which is 3 hours later, right? 3 hours later, the price of Euro USD now becomes 1.2010. The question now is, how do you represent the fact that this price became this price in 3 hours? That is where charts come in. If you did physics in school, of course, if you know this is y-axis, this is x-axis, right? And if you're plotting a graph of price against time, which is what chart typically is, a currency chart is simply a chart, a graph of price against time. Okay. So if this was 2 a.m., 2 a.m., okay, and this time is 5 a.m. Okay. If we plot this price as at this time, this was the price. 2 a.m. price is 1.200, 1.200. Okay. And at 5, okay, let me put this 5 a.m. here. Let's say 5 a.m. is here, and this right here is 8 a.m. And at 8 a.m., the price, 5 a.m., the price is now 1.2010. 1.2010. If you join this place, which is the price at 2 a.m., to this place, which is the price at 5 a.m., this is simply what a currency chart is. So this line right here can be represented in 3 ways. This is how analysis is done. This is where price time frame comes in. There are 3 methods of reading charts. This is one. The first one I drew for you here is what we call a line chart. This was the very first method that they started using to read and interpret the change of currency prices over time. This was the very first method. Very simple. Plot a graph of time against price. That's a line chart. Okay. Then they transited to what we call a bar chart. They can see this board, right? Good. Okay, somebody's asking, where can I download the ebook? The ebook is on the Telegram channel. Okay, let me type the. Good. So please click on that link and download the ebook. It's free of charge. Okay. So bar chart is the second type of way that they started using to read charts. Okay. Typically, a chart, if we draw an extensive chart, something more extensive than this, you will see this is a line chart. Let me do an example of a line chart first. This is what a line chart would typically look like. This is what a typical line chart will look like. This being the time and this being the price. Okay? So this is typically what this is time, this is price. Okay? Simple. This is what a line chart looks like. Then the advance to bar chart. A bar chart looks like this. Looks like this. This is typically what a bar chart would look like. Let me show it to you on the screen. I hope you can see. Let me zoom in. So I hope this is clear enough. Now, this is another way to interpret this kind of lines. Okay? And for a bar chart shows you four informations. Okay? It shows you that at the time where this is price, this is time. It gives you four information. Let me just single one out. This is one. We have 1, 2, 3, 4. Okay? Each single one of these bar can be a summary of what happened in the price in 5 minutes. It can be a summary of what happened in 15 minutes, in 30 minutes, in 1 hour, in 4 hours, depending on the one you choose. Because on your chart, you can determine what each bar would represent. You understand? So let's assume that for this bar here, that this is what happened. This is a summary of what happened in 1 hour. Here is the information that it gives you. Number one, this is the open. It shows you that this is the price at which this particular bar opened. As at when this bar opened, the open price. Let me single one. I don't know how else to zoom this thing so that it becomes. Is this too tiny to see? It's okay to see, but now look here. This, 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 this is what we're saying. Okay? This is the first information. The one by the left is the first information. We can trace this here. If you trace this, this is where this price opened. This is what this is showing you. If this was 2 a.m. and this is 3 a.m., it shows you that as at when 3 a.m. on the dot, the price of this currency was here, was at 0.87000. As at the open, as at 3 a.m. on the dot. Let's assume, we're assuming now that this one candle is 1 hour, okay? This is what happened by 2 a.m. This is what happened by 3 a.m. This next one is by 4 a.m. and so forth, okay? We are just, we are making assumptions, right? Good. So what we are seeing here is as at 3 a.m., this is exactly the price where this currency was, okay? And as at 4 a.m., which is the exit. As you can see, the level of this one is same with this one, shows you that this is the same price, okay? As at when it was 4 a.m., this was the ending price. This is the price at which this ended, which would be like maybe 0.8735 thereabout. You understand? Now, these two points now shows you what is the highest price at this particular currency got to within this 3 o'clock. This is the highest. This is the highest price it got to. And this is the lowest price it ever got to. Those are the four information that you see from a bar chart. Any question? Any question to this so far? Go ahead. Yes, yes. Exactly. We are coming to candlestick, but you need to understand bar chart first. Because it's from bar chart that they now developed candlesticks. You understand? So I'm just explaining bar chart so that with this concept now, if you understand this high, low, open, and close, it becomes much more easy to understand candlesticks. Because I'll show you shortly how candlesticks were formed. You understand? Is this clear enough? Any question? You were not here yesterday, so okay, you watched online. Okay, 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 okay. Fantastic question. Fantastic question. If this is below, if the open is below the close, that means it opened low, closed high. What is it? Is it bullish or bearish? No, it can't be bearish. If opened low here and closed higher, bullish or bearish? Is it an uptrend or downtrend? If I say bullish and up, it went up, price went up. That's bullish. But when you see a candle, let me find a candle that opens. See this one. See this one. It opened higher and closed lower. So this is a bearish bar chart. Now, let me now tell you how, let me now show you how a typical candlestick was developed, okay? With the understanding of what you have here. For those of us following online, if you have a question, please drop your question and I will attend to it, okay? So, let me move this. Can you see this very well? Clear enough? Good. So, this is a typical, this is what a bar chart looks like, okay? Now, the concept of candlestick is derived from bar chart. Let me draw more bar charts. Let me draw more bar charts. This is what a bar chart looks like. From what you're seeing now, is this an uptrend or downtrend? Downtrend, right? Now, if I add a body, is this looking like candlesticks now? Yes or no? If I now decide to add colors, okay, check whether there is a blue marker there. There's blue, huh? Ooh. Does this look like a typical chart now? So this candlestick still gives you the same information that you were getting from here. The only thing advantage is that it makes it easier for you with the colors. So you don't need to start looking for, is the open price higher than the closing price, or is the open price, lower? You understand? Good. So this one just gives you the color. If it's red, you know that within this time, it went down. You understand? So this can be, each of these candlesticks can represent anything. This single candlestick can be a summary of what happened in a chart in 1 hour. It can be a summary of what happened in 4 hours. You understand? So for instance, if we put this, let's say this is a H4 chart, which is a 4-hour time frame. We call them time frames. Okay, it is a 4-hour time frame. That means this whole thing you're seeing now is a summary of what happened 1, 2, 3, 4, 5, 6 in how many hours, or how many days, or how many weeks? That's a question now. Okay, any alternative answer? Those online, you can give me an answer. So if each of these candlestick is for 4 hours, this whole chart is a summary of what happened in how many hours? In 24 hours. So this is a summary of what happened in 24 hours. Correct? So this is time, and this is price. Now, another question is this now. If you want to represent everything you're seeing here with one single candlestick, what will it look like? Any idea? One single, if you want to represent everything you're seeing here. Okay, somebody said online, Precious saying 24 hours. That's very correct. We have 28 people following online. People like online things. So you guys online, you're very welcome. Thank you for joining. So if you want to represent this with one single candlestick, one single day, right? Good. So what would the candlestick look like? Just one single candlestick. Is it a red candle or a blue candle? yes, that looks like a good answer. Those of us, can we watch this video later? Yes, the video would be here later if you want, but it's good you stay online to participate so you can ask questions, because I'll not be here to always answer your question. So, okay, somebody say red candle, red candle, red candle. That's correct. Any alternative answer? Okay, good. Now, this is what the red candle would look like. The red candle will look like this. This is the first open price. Okay? Correct? Good. This candle opened here. So we can say that this is the open. Okay? Now, this candle opened, then went up. So we can see that if this is open of the candle, open, this is the high. Is that correct? This is the high. This here is the low. This is the lowest it got. And this is the closing price. This is the closing price. Closing. Here, correct. So if this is one candle, we can simply draw this. This is the open. This is the close. So this is the open and close. This is the high. So we can say this single thing here is the wick, which is here. This is where the wick started, here to here. And this is the low. This is the, sorry, this is the closing. Sorry, not here. Sorry. This is the closing. This is the closing here, okay? And then this is the wick. It touched here. So if this is one candle, it will typically look like this. It will look like this. With a small low, and then the wick up is higher. To look something like this. This will now be a daily representation of everything you're seeing here. I hope that's simple enough to understand. Simple. Good. So whenever you see a candlestick, whenever you see a chart, the first question you should ask yourself is, what time frame are we looking at currently? Is this a 1 hour time frame or a daily time frame? So with this now thought, there is no rocket science to interpret these things now. Abby? It's not rocket science to interpret them. You can single out any candlestick and you can either decide to expand it or reduce it. You can pick out one because this now is a 4-hour chart. As you can see, 4 hours. So you can single out one single time frame here, and you can give us a hypothetical knowledge about what it will look like on a lower time frame, on let's say 1 hour. You can divide this single red candle into 4 1-hour candles. You understand? But of course, it's not necessary to do that. You don't. This is just for theory, okay? Good. So every candlestick you see has 4 parts. If you want to write something, this is something to take away. So it has the high, which is the highest price. It has the open here, not here. This is the open price. This is the closing price, and this is the lowest price. Okay. Then this thing called here is called the wick. These two things. Okay. Every candle has a wick. Even if you buy a physical candle has a wick. Okay, correct? Fantastic. Now, let's move over to what you need to know when it comes to doing your analysis. Okay. Now, there are different kinds of candlesticks that indicate different things. A lot of candlesticks and indicate different things in the market. Okay. But however, these are all theories, because it's human beings like you and I that came up with these names. You understand? It's human beings that came up with this name, call this one. I can decide if I'm a very popular person in trading in the forex industry, and I can come up with anything. I can say that when you see a candle that is like this and long wick like this, that we'll call it the Tradewave candle. You understand? Once it becomes popular, everybody accepts it. That becomes the name. So it's human beings that came up with all these things and the hypothesis behind them. For instance, the hypothesis behind this is that when you see a green candle like this and a small one, and you see a red candle, the hypothesis is that the buyers have been overtaken by the sellers, and that the price of the currency will likely go down. It's a hypothesis. Because there are sometimes you see this on the chart and it doesn't go down, the price doesn't go down, it keeps going up. You understand? These are all hypotheses. It's not 100%, it's not set in stone. You understand? The idea behind this one also is that this is not complete. It's usually 3. But however, the idea behind this one is that the sellers are still strong enough and they can be overtaken at any time. They can overtake the buyers at any time. You understand? It's just, they are all hypotheses. Same thing here, this one, all these things are just hypotheses. You understand? Okay. Now, but what's the main thing you need to understand about reading charts and your whole attention when it comes to reading and understanding charts? God bless you, Lord. Okay. We have 33 people now. Wow. So the whole idea of reading and understanding candlestick is for you to be able to make an informed decision about whether you are going to buy or sell. Because at the end of the day, in trading, what you're looking for is to be correct. You want to say that this market would buy and it buys, or that this market will sell and it sells. You understand? Now, and to make analysis is really quite simple with some of the things you're learning now. And I will recommend a particular video I did here on, somewhere on our YouTube channel. I'll recommend that, especially if you want to use this particular platform that we're using here, this trading view. I won't go into how to use all these tools here. if we start it, we will not finish. But I did a video where I explained how to do analysis using TradingView, which is this platform. Okay, but I'll teach you the strategy that we use to do the trading. You understand? But you go home, just watch the video on how to use the tools. Very simple, easy to do. Okay, nothing complicated. Okay, now let's move ahead. I've already explained these things. I've explained this one. Now let's talk about support and resistance. Now let's discuss support and resistance. Now this is another theory that is highly, very important when it comes to making money on the forex market. The principle of support and resistance. In fact, if you know this alone, you are almost good to go. Almost, just remaining small. Now, the principle of support and resistance is a very simple theory, okay? Which says that the market, every single market price. When I say market, understand what I mean price, okay? The price of a currency chart, okay? Because every chart you're seeing is the market. We see it as the market, okay? So the principle simply says that if the market comes here, as you can see here, the market was moving. This is where the price started. Moved, came over here, and pushed down. It pushed down here. The principle is trying to say that if this market moves up again and comes to this place again, that the probability and the chances that this place will also push this market down is very high. It's a theory, okay? That's what the theory says. The theory says that there are sellers here that, of course, for this market to come here and push down means that there are sellers that were selling it from here to here, okay? Correct. Good. Now, this which is called the support. The theory is that if market comes here and it pushed off from here, that if it comes down here again, there is probability that the buyers will still push this market off from this same place. That's a summary of the theory, just a quick summary of the theory. Now, and finally, the final aspect of the theory says that if this resistance, as you can see, is resistance here, resistance here, resistance here, the theory says that if this resistance becomes broken, okay, if the market comes here and the sellers could not push it down and it breaks it, when this market comes down, this initial place that was supposed to be a resistance now becomes a support. So in summary, support can become resistance and resistance can become support. For instance, in this case, where resistance was broken here, it became a support here. And in a situation where support was broken, let me find a place where, okay, here, okay, I don't think there's any place. If this thing came down here and broke this place, this would have become a resistance here. The market would have pushed it down here. You understand? That's just the idea. That support can become resistant and resistance can become support. You understand? Now, let me show you this thing from the chart. Now, are you seeing what? Now, see this. What I showed you earlier. Maybe this one is. Went up. What is this place? Resistance. What is this place? What happened? It pushed it up, back to this initial resistance. Then it was now broken here. This is where this support here. This is resistance, resistance, support, support. This support was broken here. Is that? Yes, is a theory. Like I said, it doesn't mean that it happens every single time. You understand? Is a theory. Sometimes it doesn't hold. For instance, I showed you where it held. But if you look back now, if we draw a line here, you can see that this place that was a support was a support here, was a support here too. So you can't tell exactly where the support would hold. You can only predict that if this market came here and was pushed off, if it comes back here again, it will probably be pushed up again. It's probabilities. That's how analysis is done on the sharp. That's how analysis is done. Is that? Of course it works. Of course it works. This is like the backbone of trading. If you don't understand support and resistance, there's a lot that will be confusing to you. There's a whole lot that will be very confusing to you if you don't understand the principle of support and resistance. You understand? Good to go? Good. So that's what the theory says, that support can become resistance and resistance can become support. Now, how does this now apply to the chart? If this is a typical chart, okay, and you see something like this, by me looking at what I drew now, is this an uptrend or a downtrend? Is this an uptrend or a downtrend? Leave it, yes. Uptrend or downtrend? Fantastic. This is clearly an uptrend. For this thing to become an uptrend, you need to see support turn resistance, support turn resistance. This is what we call higher highs and higher lows. This is a low, this high. This low is higher than this low. This high is higher than this high. This low is higher than this one. Then this one is equal distance with this one. Then another equal one with this one. Then we'll now have another higher high, higher low, higher high, higher low. So this is typically an example of an uptrend. So for us to say an uptrend has happened, we must be seeing consistent higher highs and higher lows uptrend. Correct? Now, what will now be the characteristics of a downtrend? From what I just showed you. Okay, for those following online, I see your answers. They are all correct. Uptrend, Jude, Abdul, Bakari, correct. Precious, correct. So, from what I do now, if you want to draw a downtrend, what are we looking out for? And lower lows and lower highs. Exactly. What we're looking for is this. Is that correct? We're looking for, this is the high, lower low, higher high. When I mean high, I mean the up part. You understand? Lower low, lower high, lower low, So if we draw a line of all the highs, you can see it's consistently going down. If we draw a line of the lows, you can see it's consistently going down. So this is typically an uptrend here, and this is typically a downtrend. Uptrend, downtrend. Okay, so the characteristics of a downtrend is lower highs, lower lows. This is for downtrend. Okay, so making money in forex is you can summarize it in one sentence. Making money in forex can be summarized in one sentence. Find out where the trend is going to and follow the trend. It's that simple. It's really that simple. I told you guys yesterday that trading the forex market is the easiest thing. Is that easy. A lot of people don't believe. Let me tell you, see, I wish if this was a paid class where we have more time to do trading psychology, you will find out that 98% of the reason that people lose money is just trading psychology. If it's for knowing what to do, where to trade, you can become perfect in one week. I assure you, 1 week. What takes time is mastering your trading psychology. That is where it can take you. For some people, it can take you 1 year. For some people, it can take you 1 month. For some people, 2 months. Because human beings are different. There are some people that they are much more emotionally connected to trading. There are some people that naturally their mind is strong. So once they place a trade, they are not even whether it's going up or down, they don't care. Those kind of people are people that can become masters in trading in 1 month. So it depends. We are all individualistic. You understand? I don't know how long it will take you to master your own emotions when it comes to trading. It took me long because I didn't have mentors. You understand? It took me very long because I didn't have mentors. I was just experimenting things. I will go here, I will follow this person today, test their strategy, follow another person, test their strategy, just going up and down. You understand? Until I sat down, I told myself that you know this thing. Because there was nothing in Forex I did not know. Absolutely nothing. I knew how to use almost all the indicators. I tested everything. Alligator, Ichimoku, fractals. I tested all the indicators in this line. So I had to tell myself that this guy, I mean, you're wasting time. So stop following. I stopped jumping from one person to another. I focused on what I already knew. I mean, developed my own strategy and moved on. You understand? So trading psychology is the main thing. Making money in Forex is very simple. Find out what the trend is and follow the trend. Or find out what the trend will be and follow the trend. And the reason why that is important, what someone is asking, what is the best strategy? That's what we are going to be learning soon. Very shortly, I'll be teaching the strategy, okay? We have 42 people online now. So very shortly, I'll be teaching the strategy. So just stay tuned. It's that simple. Find the trend and follow the trend. And the reason why it is necessary to follow the trend is this, because you need to understand this part of trading. The reason why this price is moving up and down is simply because the volume of people, what you're seeing from here to here, is telling you that from here to this point, there is more volume of money going in the sell direction than there was going in the buy direction. Have you of course, have you done tug of war before? Tug of war. Okay? If somebody like me, now, if me, this guy, we're on this side, and just you and him are on this side, and we're doing a tug of war, which side are we going to? We're definitely going this way. You understand? Because more volume of people are on this side. You understand? Now, another question is this now. If, who am I going to use now? Who is the fattest person you know? Eh? Yokozuna. So if the world heavy, whoever is the world heavyweight champion, I don't watch wrestling, I don't know. But whoever is the world heavyweight champion now, if me and that guy and this guy, we are three, and then 5 of you, which direction do you still think it will move? It will still go our direction, Abi, because we have somebody who is heavyweight on our own end. You understand? Now, the reason why this is moving this way is simply because the volume of money that is going the sell direction is higher than the one that is going on buy. That is why in the market, you hear that there are big boys in the market. When we mean big boys, we mean the big banks, the people that have money, volume of money that are trading the forex market. We are talking about big banks, not First Bank and Zenith Bank. Those are baby banks. Those ones are baby banks. But those are babies. That's what I see, baby. I don't know banks like Bank of England. You understand? Those are the ones, those kind, and hedge funds that are trading in billions of dollars. So those ones, if they just put one small 1% or even 0.5% into the market will know that somebody came. Go ahead. Okay.
Can we only say that when the sellers are taking over, that money is decreasing?
No, that's not. No. It's not. I told you guys yesterday that the difference between stocks trading is in stocks, that when the price of a commodity is going down, price of a stock is going down, we can say that, okay, the company is going down, something like that. You understand? But in trading the forex market, whether it's going up or down, the volume of money is not decreasing per se. It's the same. It just as at this moment, more volume is selling. I would have easily said that. Exactly. Bulls and bears, yes. It's a simple fight between bulls and bears. I would have said that more people are selling, but that would not be logically correct, because the reason is not just more people, the reason is more money. You understand? So there's more selling pressure at this point, because the more volume of money that is in the market currently, what they are doing is selling. Not they are withdrawing. No, not that they are withdrawing. You understand? Correct? So the reason why it is that necessary for you to simply follow the trend is because even if your capital is $1 million, it's not enough to move this market from here to here. So even if you have $1 million, your money, if you buy in this market, you can't move it from 0.7000 to 0.7001. Your money can't do this thing. You understand? So the only wise thing to do in forex market is to find out what the big boys are doing and simply follow them to do it. Go ahead.
So all those hedge fund guys,
Yeah.
maybe win the market for the
No, not at all. Not at all. Not at all.
because they put their own money to sell.
No, not at all. It's not that. It's not. It's not that simple. It's not that simple. Because it's not one. Do you know the billion people that have billions of money in the market? Only one person can know. Only one bank cannot even do it. You understand? And the truth is, if all of them, because for you to sell, that means somebody is buying from you, which can be retail traders like us. We are called retail traders. Those of us with small money in the market, we are retail traders. You understand? So for them to sell here, that means they are buying from somebody. And they might be buying from all of us here, which means that we are losing. Don't worry. It will get clearer as you trade, okay? I don't want us to take more time like we took yesterday and we couldn't achieve anything, because I want to teach the strategies today, which is the main thing. The remaining things are things that you can actually, learn either from our YouTube page, or you can decide to sign up for the full class. Anyone you want to go for. Let me find the part 2. Like, I don't even have the second part of this thing. Okay. Okay, so now let's talk about terminals, market orders, and trade execution. At least now we've established the fact that we've talked about following trends and how to read and understand charts. Okay, let's talk about terminals and market orders and trade execution. Now, there are these are two platforms that most people use to trade: the MetaTrader 4 and the TradingView. This one you're seeing here, that I used to show you the chart, this one here, this is TradingView, okay? And this one here, this is MetaTrader 4. These are two platforms that people normally use to trade, okay? These are not the only platforms, but these are the ones that most traders use: MetaTrader 4 and TradingView. You can download both of them on whether your Google Play Store or Apple Store. Although currently I don't think MT4 is on Apple Store, okay? But it's on Google Play Store. So what a trading terminal is simply a platform that gives you access to trade, gives you access to trade the market. Okay? It is through these platforms that you either place a trade, whether a buy, whether a sell. Okay? So something like, I wish I could show you this on my phone, but I'll have to off this, which I don't want to. So if you download the MetaTrader 4 on your Google Play Store, you will see something like this. You'll see something like this. It has 4 pages. There's a quote page, okay? You can download it now if you now, MetaTrader 4. So it has a quote page. The quote page is where you see the currency pairs that you are looking forward to trading. This is Euro GBP, Euro CAD, Euro USD. We discussed all these things yesterday. USD CAD, and it shows you the prices. Now there is what we call the ask price and the bid price. But to aid your understanding and so that we don't waste much time, just assume in your mind, okay? Ask price and bid price is just like the difference between what a broker, what somebody who has a market, somebody who has a product, the manufacturing price and the selling price. Okay. For instance, if I buy this marker for 1,000 naira, I can't sell it for 1,000 naira. Correct? I'll sell it for like 1,200 for me to make profit. Okay, so the difference you're seeing here between this price and this price, which is how many pips. If you were here yesterday, you should know this. How many pips is this? How many pips? This is 0.8615. 0.8615, and this is 0.8617. How many pip difference? Eh? How many pips? Those online, how many pips? So this is 2 pips, okay? The difference between the ask and the bid price is what we call spread. This thing you're seeing 21 here is actually 2. Remember I told you yesterday that these values, we don't add it. And what did I call it? I called it pipette, okay? We don't add it in the calculation, okay? But in this, their own, they added it. That's why you're seeing 21. But typically, this is 2 pips, okay? Okay? Correct. So in the quote page of the MetaTrader 4, that's where you see this information. Now, the second page that you're going to see is... Oh, yeah, go ahead.
I learned that spread
Okay.
is the, let's say, the profit brokers make, or the subscription money is correct.
Okay.
And also know that, and we talked about between ask and bid.
Okay.
You said bid is buyers.
Okay.
And ask is sellers.
Okay.
So, personally, I was thinking that you yourself as retail trader,
Okay.
between what would be different between the bid and ask, that is your own profit.
That is your own profit.
Or you call it spread.
Okay.
And initially, and that spread is payment to the broker. So,
Okay. Okay. Let me explain it. Now, a spread is simply because brokers need to make money too. You understand? They are out to make money. They're not here to make you happy. They are here to make money. So there is a default price that the liquidity pool of the market, that's the global financial. I told you that they are intermediary between you and the forex market. Okay, so the price that they are getting the currency pair is not the same price that they are going to offer it to you. You get it? Because they will have to make money. So the difference between the amount that they are getting it from the liquidity pool and the amount they are offering it to you is what we call the spread. That's their own part. So once you enter a trade, you're entering losing already because they've collected the amount for that spread. You enter losing already. They have to make money. It's not a matter of now why. I mean, if it's you, won't you want to make money too? You understand? And if you notice too, there are some spreads that are higher than the other. Okay? Okay, these ones are very low spreads. But there are spreads that you can see 26, 22. There's some spreads that you can see that are as high as 50 pips, 60 pips, 70 pips. And you find out that it is these ones that are, because these are like the most traded pairs, USDJPY, these ones has USD, these are major pairs, AD, USD, USD CAD, USDCHF, these are like major pairs. That's why the spread is this low, 2 pips, 2.5 pips, 2.3 pips. You understand? But if it's exotic pairs or maybe minor pairs, you can see spread as high as 50 something pips, 70 something pips, depending on the brokers anyway. You understand? Depending on the brokers. And they will typically tell you that it's because of, it is easier to trade this. It's easier to find somebody to, because if you're buying or selling any currency, you're buying from somebody and you're selling to somebody. You understand? You're buying, when you click on buy and the market puts you buy, you bought from somebody. Somebody sold to you. You understand? They will tell you that the ease to find somebody who is selling to you at the other end or buys from the other end, that's what they are charging you for. So for these popular currencies, because more people are trading it, the spread is lower. The spread is lower because there are more people, interacting with the currency pair. But for those pairs that there are a little bit less people, they charge more. The spread is higher. You understand? That's their typical explanation of the whole thing. But when you go, like when you stay long in this market, there are brokers. There's something called A book brokers, B book brokers, but it's a complex thing. I don't want to go into that. It's not necessary. So just know this one. Okay. Okay, go ahead. Okay. Is that?
When using lot size, for instance, now 1.5
Okay.
is per 1 pip.
Okay.
Now in this spread,
Sorry, let me answer somebody on the chat. Somebody is saying that I'm skipping the strategy. No, we have not reached strategy now. We are still trying to explain the MetaTrader 4 platform. We'll get to the strategy. I'll teach you the strategy shortly. In a few minutes, we'll be joining there. We'll be entering there now. So just stay tuned. If you're here to learn the strategy, just stay tuned. It's very easy to learn. Nothing much. Go ahead.
for instance, now 1.5
Okay.
size,
15 per pip. Okay.
then this spread we are talking about,
Yeah.
if I should let's say it's using 1.5,
Okay. 1.5 lot size.
if I should let's say it's using 1.5, does it mean that $15 I will just start from minus $15?
Yes. If the spread is 1 pip,
I will start from $10.
you start from minus $15. If it's 1 pip, yes. If it's 2 pip, you start with minus 30. Now, there are three ways brokers make money. Number one is spread. Okay. Number two way is what we call commissions. There are some brokers that they don't charge you per spread, they charge you commissions. For every single trade you take, they charge you a little amount for it. Every single trade you take, they charge you for it. And there's something called swap. When you leave your trade overnight, they charge you a little fee. You understand? For keeping your trade open overnight. You understand? Okay? Go ahead.
What did they do exactly? Because the intermediary.
Okay, yes. You were not here yesterday, but let me explain it. Brokers are intermediaries between you and the Forex market. For you to be able to interact, I told you yesterday that the Forex market is a $7 trillion market. So every single day, just imagine that $7 trillion is just floating. You understand? So, but for you to participate in trading that financial market, you need a broker. You can't trade alone. Where are you going to put the money? Where are you going to trade from? So brokers they are registered with the liquidity pool, with the market liquidity. So it is through them that you can be able to participate in the Forex market. So you can't trade without a broker, unless you yourself are a broker, which you are not. Okay, so it's actually that simple. Okay. Okay. How do you measure pips to know when to enter? Or do you mean like your take profit and your stop loss? Is it what you mean?
What I mean is calculation of when it can help you know when to enter. But yes, take profit faster.
We are getting there. Don't worry. We are getting there. We are getting there. We'll talk about the strategy shortly. Okay, so it's not now the second page you'll see on a MetaTrader 4 platform is a chart page. Okay, is a chart page, which is this. So it's a page that looks like this, shows you the chart. I already taught you how to read time frame. So this is a 15 minutes time frame, as you can see here, EuroCard M15. Okay, so it shows you the chart, what is happening in the chart. So some of these things, the reason I'm not going into them fully is because I have videos on my YouTube channel that explains these things. Gives you a full explanation on how to use MetaTrader 4 platform. Okay, so for those of us offline here and for those of us online, I have a video that teaches how to use the MetaTrader 4 platform. Okay, and I think the title of the video is how to use MetaTrader 4 and it's a very detailed explanation. So I might not be going through just an overview so that we save time and so that we can enter the strategy immediately. So now trade. Now the trade page shows you the trades that you're currently undergoing. Okay. Now, as you can see here, the balance on this particular account is $49,134, which is your balance, which is the capital. Okay, and the equity shows you your balance plus or minus how much you are losing or making on the current trades you're taking. As you can see, this person that has this account has taken 1, 2, 3, 4, 5 trades. He entered Eurocard buy with 1.20. 1.20, that's how many dollar per pip? How many dollar per pip? $12 per pip, exactly. Sell 1.0, how many dollar per pip? $10 per pip, good. NZD card, how many dollar per pip? 0.5, how many dollar? $5. Now, I forgot to teach you a very easy way to do some of these things. If you see a lot size, are you capturing this? If you see a lot size 1.0, if you want to just calculate very fast the dollar per pip, just move this decimal point. If you move it here, it becomes $10 per pip. If you see 23.5 lot size, how many dollar per pip? 200. Just move. It becomes $235 per pip. So if somebody using this lot size for every pip, $235. Every pip, $235. Okay? If you're using 2.5 lot size, how many dollars per pip? $25 per pip. Okay, so it's a very easy way to calculate pip. So the trade page shows you what the trades that I've taken and what is happening on the trade. Okay, somebody is asking how to measure pips in a chart. We discussed that yesterday. Maybe you just need to rewatch the video we talked about yesterday. We discussed how to measure pips and how it's measured, and it's also on the Forex Bootcamp handbook. For those of us that are just joining us, we sent a handbook yesterday on the Telegram channel. So I've pinned the Telegram channel now. I've pinned it on the chat so that it becomes much more easy to access the handbook. So just join the Telegram group. You will see the book. We sent it yesterday. There are 2 of them, Module 1 to 5 and Module 1 to 10. So download both of them separately so you can follow up with the class and it becomes easy for you to flow with us. Okay? So, wow, currently we have 52 people online. Amazing. Now, let's talk about the news page. Now, the news page is where you see what is happening on the news. Okay. Okay, the balanced equity, this, okay. Okay, well, let me let me conclude this. So by the time you add up all these things, the losing trades and these are the 2 trades that are on profit. These ones are on loss. So if you do plus and minus, this is what you get. So currently, this account is losing $307.38. You understand? So when you subtract this value from the balance, you get equity. Free margin. Now, I'll explain margin and free margin. Margin level might be complicated. It's in percentage. Okay, it's a little complicated mathematics, which you don't need to bother ahead. But I will tell you what margin and free margin means. Now, margin, every single time you enter a trade, your broker takes part of your capital and keeps it aside. Every single time you enter a trade, it takes some part of your money and keeps it aside. That money, you cannot use it to trade. It is a very small percentage. As you can see, with all this lot size, this is the margin for everything you're seeing here. Out of this whole 49,134 capital, the margin is $401. So it keeps its amount aside. Now, the explanation behind that is so that, because they are also protecting themselves. You understand? Most brokers too are also protecting themselves. So if you enter a trade and it quickly maybe moves in such speed, because the market can be crazy sometimes, you can just enter, boom, anything can happen. So that money they kept aside won't run them into negative. You understand? That's the most explanation that some of them give for keeping out this margin. You understand? So that they don't run negative on their own end. You get? But if you're losing money, if your account is going to blow, you won't even see margin. Okay? So the free margin is how much of your capital you still have if you want to take more trades. Okay? So this margin, if you subtract this from equity, you will have this. If you subtract margin from equity, you have free margin. So free margin is how much of your remaining capital do you have if you still want to take more trades. You understand? Good to go? Fantastic. Now, news page, this is where you see news events coming out, what is moving the market. Because I told you guys yesterday, economic data move the market. If anything happens, for instance, when the Queen died, people were anticipating that the GBP USD, which is the GU, would go down, that it was going to crash, that the price of pound was going to crash, it was going to go down. And unfortunately, it didn't go down. It was even going up a few days after she died. It was even rallying a few days after she died before it now, became stabilized and all. So a lot of sentiments, a lot of news factors has a way of affecting the market. You understand? Good. So now let's keep going. Now there are different types of market orders. There are different types of market orders. So for those online, I guess you should have this, the handbook. This is module 5 now, module 5 or module 6. So you can follow up in case you're not seeing it very well on the screen. So we have market execution. Now this is a type of order that you execute. Once you execute, immediately the broker puts you into the market. If you click buy, you enter buy immediately. If you click sell, you enter sell. But there are other kind of market orders that we call pending orders. Pending orders, as the name sounds, they are orders that you've placed, but they are not executed instantly. There are 4 of them: the buy limit, the sell limit, the buy stop, and the sell stop. Let me explain it very simply, nothing complicated. Now, let's say this is a chart, okay? And this is my chart. Let me do this on nothing. Now, let's assume that you want to enter a trade on, this is Euro USD. Let's assume this is Euro USD. And you want to enter a trade here. But currently, this is where the market is. But this is where you want to enter. And you want to enter a buy here. When you place a pending order, you're telling the broker that I want to enter this market, but this is where I want to enter. So you place a pending order here, and the kind of pending order I place here for a buy is called a buy stop. So if this market comes here, keeps moving and gets to this point, immediately the broker puts you into the market, puts you on a buy position. You understand? Now, a sell stop position is the exact opposite. It's the exact opposite. Let's say you want to enter here. This is the price you want to enter. Price here. But currently, the price is somewhere here. When you enter a sell stop order, if the market comes here, triggers your sell stop. Okay? Very simple. Correct? So then buy limit and sell limit. Buy limit is if the market is going down, This is where you want to buy. This is where you want to buy. This price here, but this is where the current price is. So if you put a buy limit, if the market comes down, triggers your buy limit, the broker puts you in for a buy position. You understand? So sell limit is the opposite. Sell limit, this is where you want to sell. When this market comes, you want it to go down. You're hoping that it goes down. So you put an order here. If it gets here, the broker puts you on a sell limit. Okay? It's very easy. Now, there's no need to cram these things. The easiest way to cram it is with this word here, bliss. At least that's how I cram it. Bliss. Bliss simply stands for buy limit, sell stop. This I is just to give you, just to make it a word. Okay? Bliss. BLSS. This is always it. These both of them are down. So all other ones are up. Only thing you need to cram is just this one. Buy limit, sell stop. The ones on top is buy stop and sell limit. Okay?
When do you apply this?
Okay. When, for instance, you have done your analysis, this is an example now, a hypothetical example is not always the case. For instance, now, you have seen that this thing here is, what is it? Is this a resistance or support? Is this a resistance or support? Eh? Resistance, good. Let's assume from your analysis, you've assumed, and from your analysis, you're seeing that if this market comes down and gets back to this resistance, that this resistance is likely to break. And if it breaks, it will go higher. But maybe you're not free at the time when this might happen. Then you place a buy stop. So the buy stop will be placed somewhere here. Buy stop. So in case this market breaks here, it triggers your buy stop. The broker immediately enters you in for a buy. If it goes up, you make profit. You understand? So it depends on your strategy. Personally, I don't really do buy stop and sell stop. Okay.
Time frame, higher time frame, and as that breakout.
Okay.
Because maybe you want to use lower time frame, but you want to take profit that way. So I think that is why some people like that.
Using it. Yes, people use it for different reasons. For instance, for me, let me tell you, I use pending orders to trade news. Because this is how I trade news. For somebody asking, for those of us online, this is something that you would want to learn too. This is how I trade. Normally, I don't trade news. For me, news trading is gambling unless it's backed up by strong technical analysis. You understand? Because a news event can move the market either directions. It can move it up or it can move it down. Unless your analysis is backed up by technicals, trading fundamentals alone is gambling to me. But however, sometimes I'm willing to do the gamble. You understand? I mean, if we perish, we perish. Now, once we man they die, no, they die twice. Okay. If so, please. Okay, somebody's asking. Sorry, I'm asking, is this only online or I can attend the classroom? Yes, of course. You can attend the classroom live. We even prefer it if you're live here. So the venue is here in Abuja. So if you're in Abuja, of course, we'd love to see you. We have weekly analysis here every Monday morning. So you can join us anytime you want to. Okay, so now, what was the question I wanted to answer now? How to trade news? Good. Now, if this is where the position of the market is pending to a news event, let's say a news event is coming out by 2 p.m. and it's a very strong news, a strong news that can move the market up or down. What I do sometimes is I put a buy stop here. Buy stop, maybe with a stop loss of, let's say, 10 pips. And then most times I don't put the take profit. So if it's a news that will move the market up, it puts me inside the trade and goes up. But some news can be tricky. Some news can go up, or it can first go down, then start going up, which would cause you to lose money. But some news events, like especially the core CPI news events, most of them they move in one direction. Was that one was terrible. Last CPI news was a stop loss hunt. Last core CPI news, I told you now. Let's not talk that story outside. Last core CPI messed me up. But however, that's how I do it most times. Okay. If you want, you can put a buy stop here and a sell stop here. So either direction it goes, it puts you in the market. If it's a one directional news, or if it's the one that will go and hunt your stop loss first, you can even trigger both of them. But 7 times out of 10, you make profit. 7 times out of 10. Unless in situations where they decide to, your broker decides to be wicked during news, they will elongate the spread. You will see spread like 50 pips. So sometimes they could be that wicked. Okay. But however, daily, someone is asking, is this class daily on weekend? No, it is not daily. But however, we meet here every Monday. If you want to join us on our Monday, we do Monday morning analysis, just maybe 1 hour, 2 hours. We just started it, so maybe you can join us. Then address is this. Is a plaza good district. Okay, so that's the location there. Let me pin it to. Okay, so that said, any questions so far on pending orders? Let's move straight into the strategy. I know people here, they can't wait for strategy. I don't know whether I should do risk management before we do strategy, or do strategy before risk management. We should do risk. So for those of us online, should we do risk management first before teaching the strategy, risk management and trading psychology before strategy, or strategy before risk management? Let me know what you think. If I get like 3 answers, okay, somebody saying risk management, good. Risk management, strategy first, strategy. My God. Strategy. Well, okay. Because everybody wants to do strategy, I'll do risk management. Because I know once I do strategy now, everybody will run away. Everybody will run away, and they will run away and go and lose money. Because I don't want you to lose money, I'll do risk management first, because I don't want you to lose money. Because if you don't understand risk management in trading, just forget it. You have lost already. You've lost the battle. Now, risk management is very simple. Let's talk about risk management. In definition, risk management refers to a set of rules and decisions that allows a trader to effectively manage the risks involved in forex trading. What that simply means is, for instance, if I have a $1,000, if my capital is $1,000, I will need to have a set of rules and a particular set of decision-making process that will guide me on how to trade that $1,000. Success in forex trading, okay, is simply a product of probabilities. Everything I've taught you now, plus all those things are all theories. Theories that might not hold sometimes. You understand? What you're looking for is to make more money than you are losing money. But the truth is, you will make money and you will lose money. A lot of people find it hard because they don't understand how it works. Most times, especially, of course, myself, when I came into me, is the fact that you don't have to pay rent, you don't have to pay anything, you just have capital expenses that you're not making. That light bill you're not paying, the water bill you're not paying, the rent you're not paying, you will still pay. For instance, now, we spent good money. For us to be here, we are spending good money. Trust me, really good money. You have an idea. we are spending good money to be here. You understand? And these are recurrent expenses. It's paying for a lot of things we're paying here. If I'm on bankrupt, Abby, you understand? That same thing with forex. You will make, if you don't internalize that, and with that fact, your emotions will do you shege in this market. Because the only reason why people don't like losing in the forex market, but if I pay a light bill, it's painful that I paid light bill, but then I need the light. It's a necessary losses. Both of them is called trading. Then you are losing at the end of every month. You understand? So risk management is simply a set of rules. It's simply a set of rules, a capital of $1,000 that you decide to take. You are risking $100. Your risk per trade is $100. If you if you lose 10 consecutive times, your capital is gone, correct? Good. It now gives you the wisdom and gives you the, in fact, it's only wisdom. Okay. Because if making money in forex is probability, you have to give yourself the advantage. If this is a basket, of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 blue eggs, and 1, 2, 3, 4, 5, 6, 7, 12, 13, 14, 15. There are and 15 red eggs in this basket. Now, if you did mathematics in school, What is the probability that if I close my eye, the probability of getting a red egg or a blue egg, which one is higher? A strategy is a set of rules that you use in trading the forex market. Okay? The strategy, every strategy has a win rate. Your win rate can be 40%, it can be 50, it can be 60 rate of what a win rate of 50% typically means is that if you take 10 trades, that's a win rate of 50%. A win rate of 70% means that if you take 10 trades, you win 7 and win 3. That's a win rate of 70%. You can make money even with a win rate of 30%. Should I tell you how? That's where risk to reward now comes in. That's another thing. Another $1,000. And I take a total of 10 trades. A total of 10 trades. Okay? Hoping to make 30. So each time I'm risking $10, if I take 10 trades with that means I lose 7 times and I win only 3. I lose 7 times. 10, 10, 10, 10, 10, 10. 1. That's minus $70. This is what I lose. I was making $30. If I make still on profit or loss, I'm still on profit. You understand? So depending on showing very well on my end, I to network. Okay, so $20. That's the profit. So what I'm trying to explain is that with any win rate, depending on your risk to reward, blessed are you if you have a win rate of 60, 70%. Blessed are you. Because if your win rate is 60% and you're doing 1:2, that's every time you risk 10, you're making 20. By the time you take 20 trades, your account is almost double. You want to ask a question? Go ahead.
Is it, can we use one particular lot size to have maybe after having 70 losses, like 7% losses, and then 70%
Okay.
30%
Win. Okay.
Can one the same lot size give us this network? Can use one lot size to cover the whole.
Do you mean you want to use one lot size to cover the whole loss?
Let's say now we're using 0.1, 0.1.
Okay.
We use 0.1 throughout the trades.
Okay.
Maybe this trade now, let's say for instance, it's 70 loss.
Okay.
7 different places.
7 different trades. Okay.
3 different places.
3 different trades.
So can just only same
Lot size.
0.1.
Okay.
Or
be used to all of them. That will not be advisable because on a $1,000 account, okay, if we are risking $10 per trade, for a trade that has, let's say, 10 pips stop loss, that means we're using 0.0, if we're using 0.1 lot size, which is $1 per trade, Abi? it will take us 10 pips for us to make $1. Correct? Sorry, 10 pips for us to make $10. Is that correct? If we're using 0.1 lot size, it will take us 10 pips to make $10. What if we are entering a trade that is like 50 pips take profit and stop loss? You have to use a different lot size. So if the take profit is, if your risk is 50 pips, what you definitely be needing for this trade is 0.05. 50 pips for 0.05 would give you yes, 50 pips will give you how many dollars? Is it 25? Okay, so it's 25 pips that will give you $10, correct?
No, 0.05.
That's $0.5 per pip. So 0.5 times 50. Okay, it's not up to how many pips? 0.5 per pip. $0.5 per pip. That's if we are using 0.05 lot size. $0.5 per pip. We'll give you 25. So it's 100 pips that will give us $10. So it will require 100 pips for us to get $10. How many will give you $10? Divide 10 by 0.5. How many is it? Should be 20, Abi? Is it 20? Yes, 20. 20 pips. My brain is you understand? So so you can't be using the same lot size. Yes, the setup differs. Because there are some trades that you will see and it requires a 10 pip stop loss. Some will require 50 pip stop loss. Some will require 20 pip stop loss. So it depends on what you are seeing. You understand? Okay. 20 pips ahead. Good. So those answering 20 pips, that's correct. My brain is moving further than further than myself now. Okay, so that's it for risk management. Risk management is what informs you the best lot size to use for trade and the best risk for trade. Every professional trader would advise you, do not risk more than 3% of your account size per trade. Personally, I don't risk more than 1%. Most times 1.5% per trade.
For instance, with $1,000, that is more than $300. Don't read more than $300.
Every professional trader will tell you don't risk more than. If I want to take risk, somebody say people are taking, unless, because sometimes, of course, sometimes you can just fund an account just to double it. In that one, you can decide to risk 50% or even risk if you want to flip the account. But on my main account, never more than highest 1.5. You want to take risk 1.5. 1.5. Why that is so is because in Forex, you can't tell which of the trades would actually work. It's all hypothesis. It's all probabilities. You can't see a trade setup and say, this one must work. That might be the one that will not work worse. Yeah. You know, somebody posted something on Instagram one day. He said, somebody posted one statement on Instagram. He said, you see this statement, it can never be me. He now said, the way to be you, It will be so you, So sometimes you might enter a trade and say, this one, if this one no work, make I bend. You will bend. And it most times it's usually that one you think that no, this one, the way this one is looking, it will just shock you. You understand? So it all boils down to probabilities. Once you have a strategy, you know that if I do this strategy 10 times, 6 or 7 out of the 10 will work. Your own is just to wait for that strategy, wait for the setup. Once the setup comes, enter the trade and go and sleep. Whether it works or not, that's part of the 10. So good traders don't judge their profitability just by one trade, just with the outcome of one trade. Okay, somebody made loss. No, he's a bad trader. No. Wait for the person to take like at least 10, 20 trades. And I've already showed you that a profit, for instance, now, on our signal channel, how many signals did we turn this week? 5. We had 5 signals this week. 5 free signals, because I sent all the signal we sent on the premium channel. I sent it on the free signal this week. We had 5 trades, 2 winning trades and 3 losing trades. But the ones that we won reached TP2, which most of the time is like 1:1.5 and 1:2. That is usually our TP2. So if you followed exactly all the trades that we sent in the signal this week, you will be either on break even or in small profit, even with 3 losses and 2 wins. You understand it now? So winning in there are 2 advantages you will give yourself. The advantage of having a high risk to reward, and the advantage of keeping your percentage per risk down. Because what people don't understand, trading is not a psychological game. This is a psychological game. This is just, all these things is just your psychology. That's why I told you that learning the strategy is simple. There's nothing about it. By the time I teach it, you even find it's even very easy. By the time we start spotting it, it's very easy to see. The problem now is, okay, no challenge. So the problem now is your trading psychology. That's where the game is. If you don't understand that this thing is a psychological game, you will still be approaching it with mathematical, you will still be giving it a mathematical approach. Somebody said, is this the same things we learned from the video we paid for, or is it different? This person asking this question, are you part of the Tradewave Academy, or do you want to join? Which one? So I'll know what to give. So that's a very simple thing about risk management. Now let's talk about trading psychology before we now dive into the strategy, okay? Now, trading psychology refers to all the feelings, all the emotions, and that a typical trader will experience while you're trading. Now, there are 4 major feelings that people have once they are trading, okay? Once they start trading. Number 1 is hope. Most traders, especially newbie traders, they come into the market, they enter a trade. They enter a trade hoping that this particular trade will work. So even when the strategy is not clear, because another thing that happens in this market is, it has happened to me many times. You can be looking at this now. Let me use it as an example. You can be looking at where this market is now. And inside your mind, you use your mind to complete what will happen next. Inside your mind, you're seeing that, from what I'm seeing now, it's going down, so it will just continue going down. Is hope. And sometimes it happens unconsciously. You just use your mind to complete the chart. And guess what happened? Oh my God. I think I need my mouse for this thing. Why is it not moving now? I hope my replay this thing doesn't have issue because we'll need this a whole lot when we start. I'll need to reset this thing. Okay, but however, what I'm trying to explain is that sometimes most traders use their hand to imagine trades. They just imagine the outcome of a trade and just place the trade. That's hope. Now, fear. I explained to us yesterday that there is this innate fear in the bottom in the middle triangle. Okay. So, the fear. Most times, there is this innate fear in humans, in human beings. Okay. It's easier to believe that something bad will happen than that something good will happen. I told you guys yesterday, every human being has that tendency to believe that something wrong will happen. So most traders, when they're on profit, when their trade is going on profit, there is this fear of what if it goes down? What if it comes back to loss? You understand? But when it is going on loss, they don't have that fear. They are now hoping that no, it will come back to profit, it will become profit. Let me just wait. Let me just wait. You understand? That's another emotional, bad thing that traders do. Now, greed. Greed is another one. You see a market comes, gives you profit. You're waiting till it turns you to Bill Gates before you. There's one lesson I learned very painfully last year when it was last 2 years. It wasn't even last 2 years. The era of Shiba. How many of you did Shiba? Bought Shiba? I bought Shiba then with $200. This was 2 years ago. I bought Shiba with $200, and in 1 week, my $200 was $5,300. $200 Shiba I bought. $5,300. But because I heard that no, this coin is going where the coin is going is far. I was now pressing calculator. That if this Shiba do like this, no. It's just to go and price Nigeria. How much is Nigeria? How much is Nigeria? Let me pay cash. Do you know I watched that coin crash from that 5,300? In fact, it climbed to about 7,000 before it started crashing. I watched it. It will go down. Maybe it crash to 5,000. I'm like, no, it will go up. It will go up. I'll wake up in the morning. It has reached 4,000. I'm like, Then that fear of no, I would have sold at 5,000. Or if it goes back to 5,000 now, I will say it will drop again to 3,500. I'll be like, wait, okay, new what will happen now? Let it reach back 4,000. I'll collect my money. This thing crashed till I sold my Shiba at $700 from $7,000. So greed can do you shege. And that's something that happens to everyone. You understand? Let me say patience on your loss. Patience on loss. You're right. Okay. So then FOMO. FOMO is another thing, fear of missing out. A lot of traders have this tendency, have this, if I don't enter this trade now, this one, if I don't enter this one, I will not see another opportunity. That's not true. I tell people that in Forex, opportunity never comes once. You've heard people say opportunity comes once. In Forex, opportunity comes every time you're ready to see it. So opportunity does not come once. If you miss a trading setup, another one is coming up sometime very soon. Okay, so it's a fear that you should and must not have. Good. So now let's talk about the strategy. So for those of us that have been following online waiting for the strategy, please, it's time to go and wake up your neighbors. If your neighbor is sleeping beside you, it's time to wake them up. Now, there are three strategies that we usually teach. Okay, we teach the jackpot strategy. This is actually our main strategy. The jackpot strategy is our money strategy. Is actually, this is our best strategy. Okay, it's a strategy that we teach. This is a strategy that we use to capture the longest of trends in the forex market. This is the one we use to catch trends that can give you a risk to reward ratio as high as 1:10. Okay, and it's a very professional style of trading. Okay, so this is like our very best strategy. But we have another strategy we call the Maxman strategy. This, senior man. this this is a strategy. He knows the strategy. This is a clean. This is a strategy that we use to identify good swings in the market, good swinging opportunities. Now, and the amazing thing about this kind of trading is that you can use it as a day trader and you can use it as a swinger. Okay, you can use that as a swing strategy, and you can also use it as a day trading strategy. Now we have the martingale strategy. Now this is a strategy that a lot of people don't understand. This right here is one of the highest money making strategies in the forex market. But a lot of people don't understand it. They don't know how to trade it and when to trade it. I've made good money, a lot of free money trading martingale strategy. But the problem is that people don't know. There are three things about the martingale strategy. Number one is entry. If you don't get your entry right, you miss out on good opportunities. Number two is your management plan. How do you manage the trades? How do you know when to add more trades? And number three, what is your exit strategy? At what point do you leave the market? Those are the three strategies that we teach here at the academy. But in this class, the free class, I'll be teaching you Maxman. I'll be teaching you how to be a marksman in the market. The reason why I called it this name, because I'm the one that called it this name, is you will not see it anywhere, you will not see it on the internet. Is because it has a lot to do with, if you know what a marksman is, a marksman is more like an assassin, a sniper. And for you to be a marksman, you must have the ability to shoot long range, shoot from far, from kilometers away. And there are factors that affect how accurate your bullet can travel. The wind, the temperature, the humidity of the air. These are all things that have to align together for you to be able to shoot a gun and be sure that the accuracy of your gun will hit your target. Okay? And the reason why I also call this strategy is because relative to how we trade it, there are some conditions that needs to be right, that needs to be correct for you to actually make money off this strategy. Okay? Correct? Now, let me give you a heads up. This strategy is a trend following strategy. Some of you know me here and some of us online. I love following the trend. I don't do anything against the trend. I don't try to I don't trade reversal. A lot of people like trading reversals. When the market is moving up, they now want to come and capture it all the way down. Some people make money from it, that's fine, but this is not my style. I like if it's going up, I'm going up with it. Okay? Now, this strategy requires 2 time frames. Let me put, I don't know how, maybe how will I write it now? Let's do requirements. Requirements. Requires 2 time frames. It requires 2 time frames. It requires, this is 1. Requires 2 indicators. And then accurate technical analysis. So it is not a fundamental strategy. This is not a strategy for trading news. It's a technical analysis based trade. Now, let me give you the theory behind the strategy. When you look at a higher time frame, let's say a 4-hour time frame, okay? When you look at a 4-hour time frame and you see something like this, and you see the market go like this, this is H4, correct? What is this? This uptrend or downtrend? This is uptrend. Abi, when you look at this same thing on 1-hour time frame, it will typically look like this. This single thing you're seeing here on the 1 hour, sorry, this thing should come down small. On the 1 hour, it will look more pronounced like this. Correct. Correct. Let me explain it better. Let me draw or let me just use the chart. I think using a chart will be better because now let's use a 4-hour because I told you there are 2 time frames you need. You need 1 time frame as your main trade time frame, the time frame that you're going to be following the trend on. Then the second time frame is your entry time frame. Is the one you're going to be executing the trade on. Okay, so the higher time frame is for the trend, and the lower time frame you can use a weekly and a daily if you want to do swing for a long time, or you can do a daily and a 4 hours, or you can do a 4 hours and a 1 hour. That's the 4 hours being the higher time frame and 1 hour being the execution time frame, or you can do a 1 hour and a 15 minutes. 1 hour being the trend, the time frame that you're going to be following the trend on, and 15 minutes being your main entry. The reason why I advise to use only 2 is because if you inculcate any other time frame, it might conflict the information. Because at every time frame cannot be doing the same thing. On a 1 hour, this is what this looks like now on a 4-hour time frame. You'll be surprised that if we open this on a daily time frame, it might look like it's okay. Let me check a weekly. Let me see. Did you see anything? Now, what is this now? Looking at this uptrend or downtrend? Uptrend or downtrend? Let me check with my online audience. Okay, hello, hi, I want to join Academy downtrend. Okay. Yes, 53. Okay. Good. So please, if you have any question, feel free to ask online. So what is this looking like now? This is a bit typical downtrend. Okay. Now open this now on a 4-hour time frame. What are you looking at? Let's go 15 minutes. 1 hour. So what I'm trying to explain with this is that all the time frames cannot be doing the same thing. Okay, so you just need to single out one that you want to follow the trend on, then scale down to a lower time frame and find a good entry for that trade. Understood? Now, let me use Euro USD. Let me use for the sake of this teaching, you will do 4 hours and 1 hour. 4 hours and 1 hour. Now, 4 hours, we are following the trade happening on 4 hours, but we are executing and finding our entries on 1 hour. Correct? There are two indicators you need for this: a 50 moving average and a 20 moving average. 50 moving average and a 20 moving average. Now, let me explain why moving average is the most powerful indicator. Okay, people are following on downtrend, uptrend. Okay, wonderful, wonderful, wonderful. I see all your charts. Amazing, amazing. That's good. Now, the reason why moving average is such a very powerful indicator is moving average gives you the average price of a currency pair. And the reason why it's very powerful is because it is one of the most globally used moving averages. So a lot of eyes, a lot of attention is usually on the moving average, especially the 50, the 20, the 200, the 8, the 10 moving average. However, for the sake of this class, we're doing only 50 and 20. Okay? Now, look at this. Let me show you something. Now, this is a 4-hour time frame. Yes, for this particular strategy, 50 and 20. Now, this is clearly an uptrend. What you can clearly see here is that this little one, this smaller moving average here is the 20. This bigger one is the 50. If you're looking at this, you find out that this trend that is an uptrend is clearly bouncing off either the 20 or the 50 moving average. Let me start from this. It came here, came close here, bounced off, came over here again, broke it, bounced off this one, came again, bounced off the 20, bounced off this one, came back, bounced off the 50 again, 50 here, came here, bounced off a little, then came down, bounced off again. Are you saying something? If you scroll this all the way back, the 50 and the 20 moving average are very strong moving averages. Anytime market comes closer to it, you see some form of reaction. Like this, it came here, it tried so hard before it bounced off, before it broke, came again, bounced off this one, broke it, bounced off. So every single time it comes here, you must see a reaction. From here, it bounced off a little before breaking down. Very powerful indicator. But however, what you are looking for is not just to look at where it's bouncing up and following. The main thing is the technical analysis behind it. The main thing is the technical analysis behind it. Now, let's go. Join your class. Okay. Please, I have a WhatsApp group. I want to join the trading floor fully. I already pinned the address of the trading floor. Check the pin message. It's the pin message there. 630 Adisa Plaza. So you can join us on Monday morning, 10 a.m. here in the city of Abuja. So now let's start with the 4-hour time frame, because you start your analysis on 4-hour time frame. It's the main time frame we are looking out for, the H4. This is the main time frame that we're looking out for. What are you looking to see? You're looking to see an uptrend or a downtrend. Okay? You're looking to see the market do something like this: 1, 2, 3. You're looking for this: 1, 2, 3. You're looking for a resistance, okay, which held, becomes broken, and the market now returns back to this resistance, which you're hoping now becomes support. Remember, I told you that resistance turns support, support turns resistance, and you're hoping to continue this trend upwards. Is it clear? This is for uptrend. For a downtrend opportunity, you will go same H4. For a downtrend, you're hoping to see something like this. You're looking to see this market bounced up here, broke this resistance, and you're waiting for this market to come here so that this place here can become a resistance that can push this market all the way down. This is what you're looking for. Once you see this or this, once this market comes here, this is where you're looking for entries. You're looking for your entry to continue this uptrend up, or here to continue the downtrend down, all the way down. Okay? But to now follow this and to enter this trade joining all the way down here, if this is a 4 hours, if this is a 4-hour candle, on a 1 hour, it won't be a straight line like this. What you will typically see, depending on how strong this thing is, on a H1 time frame, this line you're seeing here won't be straight like this. It will go like this. You will see something like this. And these waves you're seeing will be bouncing off the moving average, either the 20 or the 50. Yes, this is what will typically be happening on the 1 hour. Let's show it on the chart. Okay, go ahead.
Might also go down or just hit and go.
I will show you now shortly. It will be easier to understand when you're seeing it on the chart. Oh, I think I did write this well. So for those of us asking to join the WhatsApp group, we have a Telegram channel. So you can join the Telegram channel. I just pasted the link now. I hope this link is correct. Okay, it's correct. So now let's do a replay. Let's do a replay. Okay, hope this thing is clear enough. Let me scroll back. Okay, good. Remember that what we're looking for and what we want to see is for a support or a resistance to be broken and the market returns to that support or resistance for us to enter for a buy or a sell, depending on whether we see this for a buy or we see this for a sell. Okay, this is what we're looking for on a 4 hour time frame. Now let's go. So far, this is what we have here. Let me be drawing it for you so that this is what we have here. We have this, 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 which is not good enough. This is what we have so far. This is not good entry yet. Okay? This is not good entry because we had a high here. Then we now had a lower low. Then we now have a higher high. So it is until we fully confirm that this is a higher low, then we can decide, okay, maybe to find entries. But however, this price here, this is where the support is. It has actually gone below it. This is not the same level. So this is not, it is not a valid place to look for an entry. You understand? Until we have this thing here, until we have a complete level here equal to this one, this is where we look for an entry down. This is what we're looking for. Correct? So let's keep going. I don't know what's wrong with my replay button. Let me just reboot my trading view. But any questions so far? Any question, whether offline, online, any question? Let me. Okay. 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 On what? You use 3 time frame. Okay. Okay.
First time frame to move is right. No, the prices. I use the second time frame to know the prices.
Okay. Okay. Is yes, whether you use 3 time frames, whether you use 2 time frames, the reason why I am teaching 2 time frames is to avoid the confusion. You understand? Because if you use 3 time frames, there will be more times when, let's say, the highest time frame you're using is saying something else. The middle time frame is saying entirely something different from the one you were using, from the higher time frame. And the execution time frame is now totally different. You understand it now? So that's why to use 2 time frames saves you a lot of confusion. You understand? It is much more easier to do 2 time frames. Okay? Uh, yes, that's what I want to show. But it's like I'm just okay. I'm just saying now that it's like my pro plan expired yesterday. I think it expired yesterday, and I totally forgot because I got an email asking me to that my card wasn't going through or something, and I ignored it. I forgot. And Nigeria is not helping matters. You can't make payments with, you can't make dollar payments with Naira card. Nigeria is a terrible country. God, God help us. So I'll have to now just fund cheaper cash account, then make payment.
Don't they use
They do, but cheaper cash is much more easier for me. So I think that was the effect of the email. The email was to let me know that my card wasn't going through. So I thought maybe it's one of those their technical issues. So it did occur to me that it's because of this Nigerian factor. Unfortunate. It's a pity. Okay, so let me be attempting to recharge. So you can just take 1 minute to refresh or 2 minutes. Okay, so you can just walk around, stretch your legs. Let me. So stretch yourself. So for those of us online, you can just stretch yourself a little bit while I try to sort this out.
online?
Okay,
People are doing great. Also enjoying the place is beautiful, the environment is conducive. Our master is trying. You can register anytime, anywhere. Welcome, sir. Welcome, sir.
Okay, so we are good to go. We are good to go. We are good to go. So if you're online, offline, let's call that guy outside. Let's keep going, please. So for those of us joining us from outside Nigeria, please pray for Nigeria. So please, I mean, raise prayers for Nigeria, where a lot is happening, right? So now let's scale down. Let me show you how to find opportunities. Okay, good. It's not good enough. Raise that. Bring it close. Wait, let me arrange that thing very well. It should be better now. Okay. Okay, let's go. So when we go forward, let's go forward now. Okay, good. What we'll typically be looking out for now, this is H4 time frame. We have this has happened, this has happened. What we're waiting for now is for this market to come back to this last support that was broken. And then we shut it all the way down. That's what we're looking for. Correct? Good. So let's see if we're able to get that, whether it actually happens. Okay. Okay. We didn't get it, but we have seen another support now. Now, this is a new. This is where we are. So what are we waiting for to get this before we sell? So let's see whether we are able to get that. This sell is this is what we call wicked sell. Okay. No, no, this is not good. This is not good enough because this is not good because if anything, we actually will be looking for buy at this moment because this was the last support. This was the last resistance. This was the last support. Then the market has broken this place now. So if we're able to see this market go up, then come back here, we're looking for buy. Okay? Good. Okay, we should just check. Okay. Okay, let's go. Let's see what happens. Okay. Okay, this is looking good enough now. This is looking good enough. We've been able to have this 1, 2, 3, and the market has come back to this our previous support here, which would previous resistance, which we are hoping will become a support. So this is the time where you now scale down to a 1 hour time frame, because for this market to move up, it won't just move up straight on a 1 hour time frame. It will be jumping on one of these moving, either the 50 or the 20. So you're looking to make money from that bounce that is bouncing and going up. You understand? So if you go down to a 1 hour time frame now, you already see that what you're waiting for now on a 1 hour time frame is to find out which of these moving averages is this market going to bounce off at least once. You understand? So you wait for this thing to actually come. Either it goes this way, either it comes up here and it bounces off here, then you enter. Or it comes down here and touches. You're sure it touches. It must touch. I repeat, it must touch the moving average and gives you a sign of going up. Then you buy. Now let's see if we are able to get that. Now, this strategy has a win rate of 65%. It doesn't mean it works every time, but 65-70% of the time it works. Okay, it didn't touch and it's already moving. We're already late to the market. What we're waiting for has already happened. As you can see, it came over here and then it's bouncing up the 20 already, but we did not get an entry. We did not get an entry. It would not get an entry. We would have entered here, but I don't like entering premature. I would love it to touch. I want it to touch to be sure it has touched. But however, I told you that normally it will bounce here before going, and it has already happened. But however, if the 4 hours is still showing me, it's already invalidated because we already had the higher high we are waiting for. So let's start again with the 4 hour time frame. If we're able to get our 1, 2, 3 move again, then we'll look for another entry. Okay, this is good. This is good enough now. See why this is good. We have this has happened, this has happened, this has happened, and we are back. We are back here. What are we waiting for? All the way up. That's simple. Okay? So let's now scale down to a 1 hour time frame and see whether we can follow the trend up. Okay, good. This is looking good for an entry. This small wick you're seeing here, shows you that there's some buying pressure here. And the fact that this candle ended bullish tells you that there is a bounce typically looking forward to happen from the 50 moving average. When it's bouncing up a 20 moving average, is a stronger trend than when it's bouncing up a 50 moving average. So with this, me seeing this, and with what I'm seeing here on a 4 hour time frame, this is a good place to enter a trade. Now let's enter the trade and see what happens. We're entering the trade on the 1 hour. Okay, so our stop loss will be taken from the 1 hour, but our take profit would be taken from the 4 hours. here. Let's do a 1:1.5 on this trade. So this is where we are entering this trade based on what we are seeing. We're already seeing that it has touched the 50 moving average and is likely going to bounce up. Okay, so this is our stop loss. This is where our take profit is. So let's see if this one works, because we are not sure if the one will work, but we know that if we do this 70% of the time, 100% of the time, sorry, 65, 70% of the time, it will give us profit. So at this point, what we have on this trade so far is like okay, we don't have a 1:1 yet. We have a 1:1 now. So this one is the kind of trade that will kill your trading psychology. It will get close to your take profit and it start heading back. Okay, smashed. You understand? Now, it is possible that we might have taken this trade and it doesn't hit our take profit, but we are not perturbed because we know that if you do this 10 times, 6 times out of 10, you're on profit. And remember that this is a risk. What we're taking on this trade is 1:1.5. That's our risk to reward ratio. You understand? So if we're risking $100 on this trade, we're hoping to make 150. You understand? Now, back again, let's look for another trade. Let's see another, we'll take another 2 or 3 examples. Now, before somebody will say that I'm forming this thing, maybe I'm choosing this trade, one of you should just tell me any chart you want us to do. Let's do it on any chart. Let me see those following online. We check on bullish, bearish. Only check to see if it goes high, then check if they're on the same levels. Yes, Andrew is asking, with this strategy, will you check on bullish or bearish, or you only check to see if it goes high, down, then check if they are on the same levels? Yes, okay, somebody saying USDJPY. Okay, I'll use this person saying USDJPY. Okay, now, Andrew, your question is whether you check whether it's bullish or bearish. What you're looking for is a support that has been broken that is going to become a resistance, or a resistance that is broken that you're hoping to become a support. This is a scalping and a day trading strategy. You understand? Because this trade that we just took now is this within one, okay, this is more than 1 day actually, but this actually happened in less than 2 days, and we are out of this trade. Made 1:1.5. It's not up to 2 days. It's not up to 2 days. Very 1 day and maybe half day, but it's not up to 2 days because this is a 15 minutes chart. We entered here. This is 1 full day. This is half. This is half here. So maybe approximately 2 days. Sorry, 1 hour. This is not even up to. Sorry, it's not even up to 1 day. It's not even up to 1 day. It's not even up to 1 day. Okay. No, it is now. It is. This is 1 hour. We've forgotten. It's not M15 chart. People should not confuse me here. Okay. It's 1 hour time frame. This is 1 hour time frame. So this is 1 full day. Okay. So somebody said we should do USDJPY. So let's do USDJPY. USDJPY. So remember, we are starting our analysis on H4. We'll do 2 examples on USDJPY, and that will be the end of the class. So let's do 4 hours. We'll start with 4 hours. 4-hour time frame. We're looking for the trend to spot a trend ongoing on a 4-hour time frame. So let's start with H4 time frame. Let me do a replay here. Okay. So let's go forward and see whether we'll get. Let me zoom this in. Okay, let's go forward and see what we have. Okay. I can already see something happening here. If I zoom in a little bit on this, let me expand this a little. See what I'm already seeing here. I'm already seeing this here. This support here has been broken by this red candle and is already heading back here. If you stay long in the market, it will become easy to see these things. Okay? So, what are we looking forward to happen? We are hoping that this resistance, this support here that was broken becomes a resistance here and pushes the market downwards. Okay? So, this is the time to typically scale down to a 1 hour time frame. Correct? So let's go down to a 1 hour time frame and look for let's look for. Okay, good. This is looking good already. It has touched the 20 moving average, but it has not bounced. It is currently on this time frame. So we want it to bounce to be sure that this moving average, whether this one or if this one doesn't hold it, this one will hold it. It will bounce up one of them. We are not sure of the one. So wait for the one that will show us, show us a bounce, and then we get on. Okay, so let's see whether we'll get a bounce from the 1 hour from this moving average. Good. But this count is long. It's long, but it's a good entry. Okay, it's a good entry. Let me see whether let me see how far this thing can go on 4 hours. Okay, good. No, there's not too much space, because this is where you want to take your take profit here, and there's no much space. It's almost there already. This is the next support on the 4 hour. I told you that your take profit, where you're putting your take profit based on the 4 hour, which is the higher time frame, but you're putting your stop loss based on the 1 hour time frame, which is the lower time frame that you're executing the trade. You understand? So this is where my take profit would be on the 4 hours. But on the 1 hour, this is where I'll put my stop loss. This is where I'll put my stop loss here. Somewhere above here. My stop loss, yes. My stop loss was somewhere above here. Above this 50 moving average. Because this thing can still go up and bounce off the 50. Okay? So the space in between both of them is not that good. It's not a good trade. It's not a good trade. It won't give me 1:2. It won't give me 1:2, which is what I like to take. This might just give me 1:1, but the risk on it is not. This is where the price is. It's already close to take profit. You understand? Unless this market bounces back a little bit, because this red candle is really strong. If it goes back here, I'm willing to sell. So let's see whether we are able to get that. So this moving average, these are the strongest indicators in trading. See the way it just came, bounced off the 20 sharp. However, I'm still willing to trade if this thing comes off, because I told you if this is a complete downtrend happening on 4 hours, it will just keep bouncing off this 20 and keep going down, or the 50 and keep going down. So if this thing comes back again and I see an entry and I look at the 4 hours and there's still space to the downside, I enter the sell. So let's see whether that's possible. Oh, no. No, this is not good. It didn't bounce. We need to see a red candle to be sure that the bounce is happening. Let me even check what this is looking like on the 4 hours. Okay, on the 4 hours, it's still good. It's still good. It's still good for a sell if we find an entry. So it's just to see at least one red candle here. Good entry. Fantastic entry. Short. My stop loss will be somewhere here. Then remember, you're putting stop loss using the 1 hour time frame, and you're putting take profits using the 4 hour time frame. So this is where we're looking for take profit from. So this is 1:1.4 trade, which is typically not my style of trading, but for the sake of this example, we'll do it. Okay, so let's see whether if this one works. If it doesn't work, we'll look for another trade. Oh, my network.
Nigeria.
No, it's because of this call. It's because of the call. Okay, so we are going close to take profits. Let's hope the trade works. If it doesn't work, we count it lost and we move. We move. So this one ended in loss, as you can see. Okay, this ended in loss, as you can see. So what do? We go back, we look for another entry. Go back to, let me delete this. So let's go forward. Let's see whether we'll see a good entry. No, this is not good enough yet. This is looking good, although not that good yet, because we have this here. This last resistance is broken, so it's back here. So what we're looking for is for this to bounce up and move all the way up. Okay, so let's see whether we'll get that. Let's get down to a 1 hour time frame and see whether we are able to. It's like I'm blocking this camera. Okay, you are not even checking it. I'm blocking it. I can see myself. Okay, somebody is asking, why don't you move SL to break even? That's another option. People have different style of trading, but for me, most times, unless the trade has given me 1:1, at least, I don't move to break even. But although in that trade that we took, we would have moved to break even because we had 1:1. You understand? We had 1:1, but we allowed it to move back into stop loss. So if you move to break even, probably we wouldn't have lost anything. But let's count it loss, because I want us to count one loss so that you know that loss happens. So, because most times when you teach the strategy and People go home and maybe the first trial they will try, it fails. They will assume it doesn't work. You understand? So let's count that one lost. Let's not assume that we broke even anything. We lost. We lost. Simple. We move. So we are now 1 hour time frame. We are looking for a bounce. Okay, we are looking for just one single bounce. Then we'll enter on the next bounce. Good. This is good. It has bounced up this moving average here. Okay, so let's see. Let's see whether we have space on 4 hours where we can put our take profit. There's no much space because this is where the next take profit would typically be. This last resistance level here. And this is not a good trade. It's too close. Where will you put stop loss? Let me check 1 hour time frame. Well, it's worth the risk anyway. Because I'm tired of standing. I need to finish this class and sit down. Okay, so let's go. So let's say we put our take profit here and then move our stop loss a little bit down below this moving average. So this is a typical 1:1.4 trade. Okay. Somebody is asking, how many days do you used to have the online class? This one is just a free class. This is just a free class. It's 2 days. Our full class, which is happening next week, our paid class is 4 days, Wednesday to Saturday. So if you want to join, let me know. So let's go. Fantastic. So this is a clean, this is a killer trade. Yes, assuming the TP was, it's just that I was looking at this last high because I like taking my profits before the last high or before the low. I don't wait for it to reach there. You understand? So, but if we are going to take profit here, this is a 1:2.8 trade. This is 1:2.8 trade, which would have been a killer trade. You understand? So this is a strategy that works 60 on very good days, 70% of the time. It works. And if you're patient enough, because I know it's easy now, you're looking at this thing, you're waiting for, you're seeing it, we are doing it, you're seeing it, waiting for it to get to 1:1.4. I assure you that when you are trading with your real money, by the time it gets to one, by the time it reaches here, wait, what am I? By the time it gets here, by the time it gets somewhere here, let's say this area here, your body will be doing you collect profit, collect profit. You understand? Your body will be itching you to, take how many pips? This one here. Let me check. This 213 pips. This is 213 pips. But our risk was 37 pips. Sorry, what am I? 86. Sorry, not 86. Our SL is 37 pips. Our take profit is 86 pips. You understand? So it's a very simple strategy. Something that how many pips? Okay, somebody saying how many pips is stop loss? It's 37 pips, and the take profit is 86 pips. Okay. So it's a very simple strategy that you definitely need to go back and back test. Now let me round up. Cause okay, what's the question? Before I say something else, something very vital. Go ahead.
When do you spot all these when to enter, that is the right strategy? Is it before the trade start up and commodity Friday, or you do it
No. During the market, as the market is moving.
That's when you backtest.
No, not backtesting. No, backtesting can be done anytime.
How do you, when, okay, with which pair do you backtest?
Any pair. The same thing. What I'm doing here now is backtesting.
Okay, that is past.
Yes.
Not past.
Yes. So your own now is when the market is now trading live, come to a 4-hour time frame, wait for the market to break the support, wait for that support, for the market to return to that support, for it to become resistant. You understand? Then look for a bounce on the lower time frame, enter the trade. But what I'm doing here is backtest. Because this is somebody that recommended that we do USDJPY. That's why we're doing USDJPY. This past data, yes. This is when is this?
You backtesting on past data.
On past data, yes. On past market data. But whatever the market did in the past is what it will do in the future. It repeats itself. Yes. History repeats itself in forex. Yes.
Like now,
Okay.
So you just go and backtest it.
Yes.
Watch how it happens.
Yes.
And come back during the normal
Trade.
and you see it like that.
Yes. Now, the final thing I want to share with us before we go is this. Now, the secret of success in forex trading, one of the major secrets of success in forex trading is confidence in your strategy. And you cannot have confidence in a strategy that you have not backtested. The reason I can, cause do you know that what I did now is putting my reputation on the line? Because I didn't know that this one will work. But the reason I trust it so much to do it even in front of people is because I've done it thousands of times. I know that with this thing I taught you, if I do this thing 10 times, 7 times out of 10, it will be profitable. Lowest, 6 times out of 10. Even the trade that we lost, we had 1:1 for that trade. So if we were even doing if we are only taking 1:1, the 3 trades that we've taken all are profits. The reason why I trust and I'm able to show this strategy to over how many people now? We're about 55, we're like 40 people now, is because I trust the strategy. It's a strategy I've been using for years to make money. So I know that if I repeat this process 10 times, 6 times, 7 times will give me profit. You understand? So what I would typically advise you to do, both if you're online and if you're offline, go and do a backtest this thing. You need to trust it yourself. Don't trust it because I'm teaching it. Trust it because you've tested it and you are sure it works. Why that is necessary is because if you don't backtest it and you meet losses, because of course there are sometimes you do this and it doesn't work, it ends in loss. You might feel like it doesn't work and you abandon it and you try something else. You start looking for another strategy, start jumping to another class, looking for another mentor. You understand? So you need to backtest this to be sure that it works and that you trust it enough for you to do it. You understand? So in our paid class, we're having a paid class next week. So for those of us online, offline, we're having a paid class next week. Unfortunately, our free class is just 2 days. So there is no time to teach you a lot on trading psychology. Trading psychology is the foundational aspect of trading. The reason why I might not be very free to teach everything I know about trading psychology online is because this is a free class. This trading psychology took me 3 years. It took me 3 years to master my trading psychology. So I'm not willing. I'm not that liberal to teach it for free. So trading psychology and risk management is the backbone of success in trading. Okay, and that's one aspect that we spend a lot of time to teach in the paid class. Okay, so the paid class starts Wednesday through Friday. It's a 4 days class. Those that want to join online can join online. Those that want to join us physical class can join us physical class. So that's where I spend more time to teach you trading psychology and then the jackpot strategy. The jackpot strategy is the master strategy, the king of strategies. You understand? So, but however, like I said, I've given you a strategy that you can use for free. If you're already good in backtest the strategy and make good money for yourself. Okay? But of course, always give please do well to give us credit when you start making money. So don't tell them that you learned it yourself. I taught you. So okay. Yes, somebody is asking, are we going to have access to the replay? Yes, you would have access to the replay. Okay. So I will share so for those asking how much is the online class, for the paid class, sorry, I'll share that on the Telegram channel right now. So you have a question, you wanted to ask a question, go ahead.
Yes, my question is, how to measure the views.
Okay.
Yeah, like you show us how to measure the views. And then how do we draw trend line? Also, can we do all these things on phone? That is the back testing.
The back testing. Yes, you can do it on your phone.
Yes.
Okay.
As we were pressing something was running, you say it's a history. So
Yes, it's a replay function. This thing called replay function. It is on Trading View, but you have to be subscribed. Okay, the subscription for I'm using a pro plan. They have a pro plan and I think a pro plus plan and another plan. But however, I use just their pro plan is enough for me. Okay, their pro plan is 7,000 something, 7,000 something. I don't know, 7,000 something. Seven what? Yes. So that's their pro plan. Okay, so you can use their pro plan.
because if you go to the history, doing back then, it will just be stable, static like this.
Yes, the same way I'm doing here. That's what you see when you're using their pro plan. So you can use it to do your back test. It will help you a lot. Okay. So for those of us asking online about the online class, is 65,000. But however, early bird payment, you can pay 50,000 naira if you are paying before Tuesday, right? When is the early bird payment ending? Is it Monday? Monday. Okay, so if you pay before Monday, is it Monday? Is it that short? So if you pay before Monday, you get to pay 50,000 naira, which is a little less than $100. That's if you want to join us from outside the country. So let me know if you want to join the class, and if you want to join the class, just indicate, or maybe I'll just put a private chat here so maybe you can reach us personally. Okay, so in the full class, now let me give you some of the bonuses of joining the full class. Number one, because there are a lot of bonuses you get to enjoy. So now the link I just posted is a link to my DM, so it brings you straight to my DM in case you want to join online. Okay, in case you want to join online, click on this link, it brings you straight to my DM. Okay, so there are some things you get to enjoy when you join the free class. Let me share with you the paid class. Sorry. Okay, so there are bonuses that you get to enjoy when you join the when you pay for the add join us, via the paid class or join the academy fully. Number one, you get a free lifetime coaching. So you get access to ask me question, any question at all. Okay, you have on trading, you have a question, maybe you're trading and you meet a challenge and you want to ask questions, I'm always available if you are my student. Okay, so that's one of the benefits you get. Then number two, you become a part of our academy. Once in a while, we do updated, we do update our course. Sometimes we do private, just for students. You understand? Those are part of the things that you get to get access to also when you join us fully in the academy. Okay, so once in a while I update the course. Last was the last update? Was last beginning of this month. Beginning of this month, I added 4 more courses to what we already have. So I update it every month, depending on the questions people ask. If you start trading and you meet a challenge, I do a video for that. You understand? Do a video explanation on that and update it on the course. Okay. Now, number three thing you get is that you get free access for 3 months to our premium signal channel. So we have a signal channel where we send out signals every day, most times every day. So our premium signal channel is different from our free signal channel. So you get access to that free for 3 months. Then number four, you become a member of our student support group. Okay, we have a WhatsApp group only for students. Four of our students within last month and this month have passed what's it called? Prop firm account. There was one lady, I have one testimony to even share. There was one lady that joined last month. So she said that she has tried a lot of prop firms. She has tried like 3 different prop firms. She has failed and she has lost a lot of money and all of that. So she asked me, because she was reaching from America, she asked me for one thing, that I should please give her, because she bought the course. She didn't even tell me. She just saw my course on YouTube and paid for it. Nobody coded her, nobody tried to sell the course to her. She just saw it and paid for it. So she now came on my DM and was like that. She just give her 1 hour to just do a private class just to confirm that she has learned what I taught in the class. So after a long while, I said, okay, no problem, let's do the class. We did the class and I just put her through, taught her some of the things I taught you here, but majorly the jackpot strategy. That was what I, taught her about. So taught her and all. And she went again for a profit account. She was going for an account of $200,000. And guess what? She passed the account in 3 days. Is it 3 days? Let me check that out. 3 days. She passed the profit account in 3 days. Got $200,000 funded. Sweet. Sweet. You understand? So those are some of the things you enjoy if you are my student. Okay. So then another thing you get to enjoy is you get discount, further discount from all our products. Because aside teaching forex, we have trading robots which we are relaunching before the end of the month. We have some other products that might be interesting to you. So you get discount once you become a member of the academy. Anything else that we're doing that requires other people paying money, you get discounts on it. Okay. Then number 6, you get free permission to use our trading facility. So if you stay here in Abuja, you can come to here anytime, sit down, trade anytime during the week. You can come here and use this as your office for trading if you are part of our academy. Okay. So also you have free access to our trading events and group trading. And then finally, you get access to a personalized link that you can use to market the course and get commissions. Because we have an online course that we currently for those that want to join online. Okay, so you can get the course and then we give you a personalized link so that anybody will refer the course to and pays through you, you get paid 30%. Okay, for instance, if the course is 100,000, somebody buys the course, you get 30,000, easy peasy. It's automated. It's not even us that will pay you. The system pays you. Okay, so those are some of the advantages that you get to enjoy if you are a member of our academy. Okay, so somebody is saying, okay, I'm watching from Lagos. So Bakari from Lagos, thank you. Nice to have you. So if you want to reach me personally, click on the link click on the link I pasted so you can reach my DM and we can discuss. Somebody saying, do you consider yourself a technical trader? Fundamental easy. Well, I'm a technical trader from everything I shared with you here. I'm a technical trader. Although I gamble on fundamentals once in a while. Okay, I told you, I just shared with you guys how I trade fundamentals. It's not my major style of trading, but I do trade fundamental news events once in a while. Okay, somebody say, watching from Kampala. Thanks for your generosity for the 2 free days. Thank you, Kizito from Kampala. So nice to meet every one of you. So till we meet again, we call it a day. So cheers to you guys. Thank you. Thank you for being a part of the class. Thank you for joining. This is Tradewave Academy. We have an office here in the city of Abuja, Nigeria. So if you want to visit us, the address is pinned on the chat, on the live chat, so that you can visit us if you would love to visit us, and we would love to meet with you too. So that said, thank you, thank you, thank you for joining. Thank you, and have a wonderful time in the Forex market. Cheers. Oh, yes, you can end the